The Social Security Administration just dropped numbers that millions of Americans have been waiting for, and if you're counting on those monthly checks, the next 60 seconds could change how you plan the rest of your year. We're talking about official cost of living adjustments that directly impact your bank account, your budget, and your purchasing power in 2025. Whether you're receiving retirement benefits, supplemental security income, or disability payments, these aren't rumors or speculation. This is straight from the SSA's latest announcement, and the percentage increase is higher than many experts predicted just months ago. What makes this particularly important right now is how these changes interact with Medicare Part B premiums, which have also been finalized. Their relationship determines your actual take-home amount, not just the headline number you'll see in the news. And here's what most sources won't tell you. The exact date these increases hit your account varies depending on your birth date and benefit type, meaning some recipients will see these changes before others. We are breaking down every detail, including the maximum benefit amounts, the new income thresholds, and what this means for your tax situation if you're still working part-time. Let me be completely straight with you about what's happening right now with Social Security, because there's a lot of confusion floating around, and you deserve the real facts. The Social Security Administration has confirmed the cost of living adjustment for 2025, and we are looking at a 2.5% increase across all programs. Now, I know what some of you might be thinking. That doesn't sound like the massive raise the title suggested, but hold on, because when you break down what this actually means in dollars and cents for your specific situation, and when you understand how this compares to previous years and what it means for different benefit types, this is actually more significant than it might appear at first glance. Let's start with the reality of what 2.5% means for actual beneficiaries. The average retirement benefit right now sits at about $1,927 per month. With this adjustment, that's going up to approximately $1,976 per month. That's an extra $49 each month, which translates to about $588 more per year. For some people, that might not seem life-changing, but when you're living on a fixed income and you've watched your grocery bills climb, your utilities increase, and your prescription costs rise, an extra $50 a month can mean the difference between making tough choices and having a little breathing room. And here's something crucial that doesn't get talked about enough. This increase is permanent. It's not a one-time payment or a bonus check. This becomes your new baseline, and it grows your benefit amount for every year going forward, which means it also affects any future cost of living adjustments you'll receive. Now, if you're receiving the maximum Social Security benefit because you paid into the system at the highest levels throughout your career, your situation looks quite different. The maximum benefit for someone retiring at full retirement age in 2025 is jumping from $3,822 to approximately $3,918 per month. That's a $96 monthly increase, or $1,152 extra per year. For those of you who delayed retirement until age 70 to get those delayed retirement credits, your maximum benefit is climbing even higher, moving from around $4,873 to about $4,995 per month. That's a more substantial increase when you look at the actual dollar amounts, even though the percentage remains the same across the board. The situation gets more interesting when we talk about supplemental security income, which operates under different rules than regular Social Security retirement benefits. SSI is designed for individuals with limited income and resources, and the federal benefit rate is increasing from $943 per month to $967 per month for individuals. That's a $24 increase each month. For couples receiving SSI, the rate is going up from $1,415 to $1,450, which is a $35 monthly increase. Now, SSI recipients often face the tightest financial circumstances of any beneficiaries in the entire Social Security system, so even these smaller dollar amounts can have an outsized impact on daily life. What makes SSI particularly complex is that many states provide supplemental payments on top of the federal benefit, and those state supplements may or may not increase at the same rate or at the same time, depending on where you live and how your state legislature handles their budget process. Social Security disability insurance beneficiaries are seeing the same 2.5% increase applied to their monthly payments. The average SSDI benefit is currently around $1,539 per month, which means it's increasing to approximately $1,577 per month. That's roughly $38 more each month, or about $456 over the course of the year. For disabled workers who rely entirely on SSDI as their sole source of income, this adjustment helps offset some of the rising costs they've experienced throughout 2024. What's particularly important for SSDI recipients to understand is that this increase doesn't affect your disability status or trigger any kind of automatic review of your case. Some people worry that any change to their benefit amount might prompt Social Security to question whether they still qualify for disability, but cost of living adjustments are completely separate from the medical review process. Here's where things get really important, and this is the part that trips up a lot of people every single year. We have to talk about Medicare Part B premiums because they directly affect how much money actually lands in your bank account. The standard Part B premium for 2025 is set at $185 per month, which is actually an increase of about $10.30 from the 2024 premium of $174.70. Now, if you're like most Social Security recipients, your Medicare premium gets automatically deducted from your Social Security check before you ever see the money. This means that while your gross benefit is increasing by 2.5%, you're also paying more for Medicare Part B. And for many people, a significant chunk of that cost of living adjustment gets eaten up by the higher Medicare premium. Let me give you a concrete example so you can see how this actually plays out. If you're receiving that average retirement benefit of $1,927 per month, and your Medicare premium was being deducted, your net payment was around $1,752. With the 2025 adjustments, your gross benefit goes to $1,976, but now the Medicare premium is $185, leaving you with a net payment of about $1,791. That's still an increase of roughly $39 per month in your actual take-home amount, but it's noticeably less than the $49 gross increase. There's also something called the hold harmless provision that protects certain Social Security beneficiaries from having their net benefit reduced because of Medicare Part B premium increases. This rule states that if you're currently enrolled in Medicare Part B and having the premium deducted from your Social Security benefit, your Medicare premium cannot increase by more than your Social Security cost of living adjustment. In other words, the law ensures that your actual Social Security check cannot go down from one year to the next solely because of a Medicare premium increase. However, this protection doesn't apply to everyone. If you're new to Medicare, if you're a high-income beneficiary subject to the income-related monthly adjustment amount, or if you pay your Medicare premium directly rather than having it deducted from Social Security, the hold harmless provision doesn't protect you, and you'll pay the full premium increase regardless of your Social Security adjustment. Speaking of high-income beneficiaries, let's talk about IRMAA, which stands for Income-Related Monthly Adjustment Amount. This is the extra charge that higher-earning individuals pay for Medicare Part B and Part D coverage. IRMAA is calculated based on your modified adjusted gross income from 2 years prior, which means your 2025 IRMAA is based on your 2023 tax return. The income brackets for IRMAA adjust slightly each year, and for 2025, if you're single and your income was above $106,000 in 2023, or if you're married filing jointly with income above $212,000, you'll pay more than the standard Part B premium. The additional amount ranges from an extra $74 per month on the low end up to an extra $419.30 per month for the highest earners. This is something that catches a lot of people off guard, especially if they had a one-time income spike 2 years ago from selling a property, taking a large retirement account distribution, or receiving some kind of unusual payment. The good news is that if your income has decreased since that tax year because of a life-changing event like retirement, death of a spouse, divorce, or loss of income-producing property, you can appeal your IRMAA determination by filing Form SSA 44 with Social Security. Now let's talk about timing, because not everyone receives their Social Security payment on the same day, and understanding your payment schedule is crucial for planning purposes. If you started receiving Social Security benefits before May 1997, or if you receive both Social Security and SSI, you get paid on the 3rd of each month. For everyone else, your payment date depends on your birth date. If you were born between the 1st and the 10th of the month, you get paid on the 2nd Wednesday. If you were born between the 11th and the 20th, you get paid on the 3rd Wednesday. And if you were born between the 21st and the 31st, you get paid on the 4th Wednesday. SSI payments always arrive on the 1st of the month, except when the 1st falls on a weekend or holiday, in which case the payment comes on the last business day of the previous month. These new increased amounts will show up in payments received in January 2025. which for most people means either the first few days of January or your scheduled Wednesday later in the month. Another aspect that deserves attention is how this cost of living adjustment interacts with your taxes if you have other sources of income. A lot of Social Security recipients don't realize that depending on your total income, between 50 and 85% of your Social Security benefits can be subject to federal income tax. The thresholds for taxation haven't been adjusted for inflation in decades, which means that as your Social Security benefit increases, and if you have income from pensions, retirement accounts, or part-time work, you might find that a larger portion of your benefits becomes taxable. The combined income thresholds are $25,000 for single filers and $32,000 for married couples filing jointly. If your combined income, which includes your adjusted gross income plus non-taxable interest plus half of your Social Security benefits, exceeds these thresholds, you'll owe tax on a portion of your benefits. With this cost of living adjustment, some people who are just below these thresholds might now find themselves owing tax on their benefits for the first time, which is why it's worth reviewing your tax situation, especially if you're taking distributions from retirement accounts or if you have investment income. The earnings test is another consideration for those of you who haven't reached full retirement age yet and are still working. If you're receiving Social Security retirement benefits before your full retirement age and you're earning income from work, Social Security will withhold some of your benefits if your earnings exceed certain limits. For 2025, if you won't reach full retirement age during the year, you can earn up to $23,400 without affecting your benefits. Beyond that amount, Social Security withholds $1 in benefits for every $2 you earn above the limit. In the year you reach full retirement age, there's a higher limit of $62,160, and Social Security withholds $1 for every $3 you earn above that amount, but only counting the months before you actually reach full retirement age. Once you hit full retirement age, the earnings test disappears completely and you can earn as much as you want without any reduction in your Social Security benefits. These earnings test limits increase each year, usually in line with national wage growth, and they represent one of the most commonly misunderstood aspects of the Social Security system. For those of you helping aging parents or family members navigate their Social Security benefits, this is a good time to make sure their information is up to date with the Social Security Administration. If they've moved, changed banks, or need to update their direct deposit information, all of that can be handled through their My Social Security account online or by calling Social Security directly. Having accurate information on file prevents payment delays and ensures that when these increased amounts start flowing in January, there are no hiccups in the delivery. It's also worth checking that their Medicare coverage is still appropriate for their needs, because the annual enrollment period that just ended might have offered opportunities to switch plans that could save money or provide better coverage, which becomes even more important when we are talking about relatively modest increases in monthly benefits where every dollar of savings matters. The broader context here is that cost of living adjustments are determined by the Consumer Price Index for urban wage earners and clerical workers, specifically the average from the third quarter of one year compared to the third quarter of the previous year. The 2.5% increase for 2025 reflects the fact that inflation has cooled considerably from the extreme levels we saw in 2022 and 2023, when cost of living adjustments reached 5.9% and 8.7% respectively. Some people look at this smaller adjustment and feel disappointed, but it's actually a sign that overall price increases have slowed down across the economy. The challenge, of course, is that even though inflation has moderated, prices haven't gone back down to where they were before. Your grocery bill today is still significantly higher than it was 3 years ago, and this 2.5% increase is calculated on top of a cost of living that's already been adjusted upward substantially in recent years. Looking at your total financial picture is essential as you absorb this information. This cost of living adjustment is just one piece of your retirement income puzzle, and understanding how it fits with your other income sources, your expenses, and your overall financial goals helps you make better decisions throughout the year. If you have the ability to delay taking Social Security until a later age, these cost of living adjustments actually work more in your favor because they're applied to a higher base benefit amount. If you're already receiving benefits, this might be a good moment to review your budget, look at discretionary expenses, and think about whether there are opportunities to reduce costs in areas like insurance, subscriptions, or utilities that could stretch your increased benefit even further.